Today, we are diving deep into one of the most pivotal financial developments emerging from Baghdad in recent years. The Central Bank of Iraq is advancing its framework to introduce a sovereign central bank digital currency, commonly referred to as a digital dinar, designed to operate in parallel with ongoing efforts to modernize national payment systems and prepare for structural currency updates, including note redenomination. At the same time, high-level discussions surrounding Iraq's accession to the World Trade Organization, alongside ongoing structural reforms in international trade finance, are signaling a systematic shift toward full integration with the global financial system. To understand what this actually means for anyone tracking the Iraqi dinar, we must look beyond surface-level headlines and dissect the economic realities, technical mechanics, short-term adjustments, and long-term trajectory of these monumental policy steps. To grasp the full significance of a digital dinar, it is essential first to clarify what a central bank digital currency actually is and what it is not. A central bank digital currency, or CBDC, is not a speculative cryptocurrency, nor is it a private decentralized token. Rather, it is a digital form of a nation's legal tender, issued, backed, and managed directly by the central bank. In this case, the Central Bank of Iraq. One digital dinar holds the exact same legal status and face value as a physical paper dinar issued by the monetary authority. The introduction of a digital dinar represents an evolution in how money circulates within an economy. Globally, central banks are researching and deploying CBDCs to modernize their domestic payment rails, lower the overhead costs associated with printing, transporting, and storing physical paper currency, and enhance overall monetary oversight. For decades, Iraq's economy has been heavily reliant on physical cash transactions. Estimates have historically shown that a massive portion of the circulating currency resides entirely outside the formal banking sector, kept in personal safes, private reserves, or informal business holdings. This heavy dependence on physical paper money creates several structural challenges for the central bank and the Ministry of Finance. It leads to periodic domestic paper liquidity shortages, increases the cost of currency logistics, limits the reach of commercial banks, and makes tracking capital flows and tax collection exceptionally difficult. By introducing a digital dinar alongside existing physical notes, the Central Bank of Iraq aims to draw a significant portion of this unbanked cash into the regulated financial system, fostering modern financial inclusion and allowing capital to move safely through digital channels. The announcement that a digital dinar is being prepared alongside plans for physical note redenomination highlights a coordinated monetary strategy. Redenomination, often discussed in financial circles as restructuring the nominal value of banknotes, is a standardized process used by central banks around the world to simplify accounting, reduce transaction complexity, and optimize the physical currency structure. When an economy operates with large nominal currency figures, where simple daily purchases require large stacks of bills, accounting systems, commercial point-of-sale machines, and banking software can experience operational inefficiencies. Redenomination adjusts the scale of the currency units, making price quotes, financial record-keeping, and daily commerce far more manageable. Combining this physical adjustment with a digital currency initiative ensures that as new physical notes are introduced, a modern digital alternative is immediately available to absorb commercial demand. It is crucial for market observers to understand the fundamental difference between nominal redenomination and an economic change in exchange value. Redenomination is an administrative rescaling of the monetary unit. It changes the numbers displayed on banknotes and invoices, but it preserves exact purchasing power parity across the economy. For instance, if a cup of coffee costs a certain amount under the old nominal structure, it costs the exact proportional equivalent under the new nominal structure. The intrinsic economic value of an individual's purchasing power, savings, or assets remains unchanged by the arithmetic redenomination itself. Misinterpreting redenomination as an instantaneous increase in wealth is one of the most common misunderstandings in foreign currency tracking. Responsible economic analysis recognizes redenomination for what it truly is: a structural tool designed to streamline commercial activity, reduce transaction costs, and bring clarity to national financial accounts. The deployment of a digital dinar serves as a foundational pillar for Iraq's broader transition toward a modernized electronic financial ecosystem. Over the past 2 years, the Iraqi government, under Prime Minister Mohammed Shia al-Sudani, alongside the Central Bank of Iraq under Governor Ali al-Alak, has aggressively mandated the adoption of electronic payments, point-of-sale terminals, and digital wallet platforms across both public and private sectors. Fuel stations, government ministries, commercial retail hubs, and service providers have increasingly shifted away from accepting paper cash, requiring electronic payment tools instead. The digital dinar fits seamlessly into this broader policy direction, giving citizens and businesses a central bank-backed digital asset that can be transferred instantly, securely, and with minimal transaction fees across participating financial institutions. This technological transition plays a vital role in enhancing transparency, combating financial illicit activity, and enforcing anti-money laundering regulations. When transactions occur entirely in physical paper cash, tracing the origin and destination of funds presents immense logistical hurdles for regulatory authorities. A digital dinar, operating on structured, traceable central bank infrastructure, creates an immutable record of capital movements within the formal economy. This drastically reduces opportunities for tax evasion, illegal currency smuggling, and unauthorized capital flight. For international regulatory bodies, correspondent banks, and global trade partners, seeing a country implement robust digital payment architecture provides strong assurance that financial compliance meets rigorous international standards. The relationship between domestic financial modernization and international trade support is particularly highlighted by Iraq's ongoing efforts regarding World Trade Organization accession. Achieving full membership in the World Trade Organization requires a country to demonstrate that its commercial laws, banking systems, trade financing mechanisms, and monetary governance adhere to globally accepted benchmarks. International trade relies heavily on letter of credit facilities, swift cross-border settlements, transparent trade invoicing, and stable, predictable foreign exchange channels. An economy dominated by physical cash and informal currency exchanges struggles to satisfy international trade requirements. By establishing a digital dinar, enforcing commercial electronic payments, and harmonizing banking standards, Iraq is actively removing technical barriers to global commerce. Furthermore, these digital payment reforms directly support the Central Bank of Iraq's comprehensive strategy to modernize private and public commercial banks. Under recent regulatory pathways, including strict directives requiring commercial banks to meet heightened capital adequacy, governance, and risk management criteria, the central bank is actively reshaping the domestic banking industry. Banks operating in Iraq are being guided toward establishing direct Tier 1 correspondent banking relationships with major global institutions. These direct relationships allow Iraqi importers and exporters to settle trade transactions directly in foreign currencies like US dollars, euros, or regional currencies, without relying on complex, multi-layered intermediary networks. A digital dinar provides the underlying domestic settlement layer that connects local merchants directly to these international banking pipelines. To evaluate the short-term implications for Iraqi dinar observers, we must examine what happens during the initial implementation phase of a digital currency rollout. In the short term, the market will undergo an adjustment period characterized by infrastructure expansion, public education campaigns, and regulatory fine-tuning. Citizens, retail shopkeepers, and major enterprises must adapt to handling digital wallets and processing central bank digital transactions alongside traditional payment methods. Transitioning a historically cash-dependent population into a digital ecosystem naturally encounters temporary operational friction, such as technical onboarding, card distribution, and merchant point-of-sale integration. Consequently, the central bank will inevitably maintain a dual system, where physical notes and digital dinars exist concurrently for a considerable transition period. In terms of market liquidity, the short-term impact of a digital dinar is expected to be stabilizing. One of the persistent economic headaches in Iraq has been localized physical liquidity bottlenecks. Even when the central bank has adequate overall reserves, physical banknotes can become locked up in informal holdings, causing temporary paper cash shortages at bank branches and government disbursement centers. A digital dinar allows government payrolls, pensions, vendor payments, and commercial settlements to execute instantly without physical banknote delivery. This eases pressure on physical cash vaults, reduces paper printing expenses for the central bank, and ensures that funds remain continuously liquid and active within the formal economy. Another critical short-term factor is the management of the parallel market exchange rate versus the official central bank exchange rate. The official exchange rate set by the Central Bank of Iraq remains anchored at 1,300 dinars per US dollar for authorized trade and legitimate foreign currency transactions. However, an informal parallel market has historically persisted due to unverified cash transactions and speculative demand. By funneling commercial trade and domestic transactions through transparent digital dinar channels and verified central bank platforms, the government limits the scope of illegal cash operations. As informal cash demand shrinks and legitimate trade moves through formal digital channels, the artificial gap between the street exchange rate and the official central bank rate is designed to narrow, leading to greater exchange rate stability across the economy. Looking at the long-term economic implications, the creation of a digital dinar alongside structural currency reforms represents a key step towards sustainable economic diversification. Iraq's economy has historically been vulnerable to international oil price volatility, with oil exports generating the vast majority of government revenue. To build long-term resilience, Iraq must foster a strong non-oil domestic economy, attract foreign direct investment, and expand domestic agriculture, manufacturing, logistics, and tourism. International corporations and foreign direct investors look for financial environments characterized by structural transparency, secure digital settlement networks, low transaction friction, and regulatory certainty. A modern digital payment architecture positions Iraq as a credible investment destination in the Middle East. In the long run, the digital dinar also enhances the central bank's ability to execute effective monetary policy. When the vast majority of money circulates as physical cash outside the banking sector, central bank policy levers, such as interest rates, reserve requirements, and commercial lending incentives, have a limited impact on the broader economy. However, when money moves through digital accounts and central bank digital rails, the monetary authority can monitor economic velocity, control inflation more precisely, measure consumer spending trends in real time, and adjust policy settings to support sustainable economic growth. This increased policy precision protects the domestic purchasing power of the national currency over time. For followers of the Iraqi dinar, understanding these long-term macro dynamics provides essential context. Financial updates regarding digital currency, note redenomination, or trade negotiations reflect structural modernization rather than sudden, speculative revaluations. True currency strength in any developing sovereign nation is built systematically over time. It is driven by consistent GDP growth, rising non-oil revenues, prudent fiscal management, robust foreign exchange reserves, low domestic inflation, political stability, and total integration into global trade networks. The rollout of a digital dinar and the modernization of physical notes are the foundational technical building blocks that make long-term economic growth possible. When reviewing news about World Trade Organization progress, it is helpful to recognize that WTO accession is a comprehensive multi-year process involving rigorous trade policy reviews, legal harmonization, intellectual property protections, and service sector open market agreements. The fact that ongoing WTO meetings are actively aligning with domestic banking reforms signals that international multilateral institutions view Iraq's structural changes favorably. As Iraq completes these final regulatory and technical benchmarks, the nation moves closer to full integration with global trade standards, making cross-border commercial transactions faster, safer, and significantly cheaper for businesses operating inside and outside the country. It is equally important for market participants to maintain a grounded, analytical perspective regarding timelines. Complex financial engineering projects, such as launching a national central bank digital currency, executing a structural currency redenomination, and upgrading commercial bank core infrastructure, require years of systematic testing, cybersecurity auditing, legal framing, and gradual pilot deployments. Central banks globally approach CBDC implementations with extreme caution to protect financial stability and avoid operational disruptions. The Central Bank of Iraq's gradual, multi-phase approach ensures that technical systems are thoroughly stress-tested and that commercial banks are fully capable of handling digital dinar volume alongside existing currency notes. As an observer or follower of Iraqi economic updates, The most effective approach is to focus on official policy publications, economic indicators, and verified regulatory circulars released directly by the Central Bank of Iraq, the Ministry of Finance, and recognized international monetary organizations like the International Monetary Fund and the World Bank. Sensationalized claims, unverified internet speculation, and promises of instant wealth often distort routine central bank administrative announcements. By evaluating these updates through a clear macroeconomic framework, you can appreciate the genuine progress Iraq is making in upgrading its economic infrastructure without falling prey to unrealistic expectations or risky financial behavior. The broader story unfolding in Iraq's economy is one of transformation from an isolated cash-heavy system into a modernized, transparent, and digitally integrated financial structure. The introduction of the central bank digital dinar, working alongside physical note redenomination and global trade alignment, confirms that Iraq's monetary leadership is committed to long-term institutional reform. These policy steps establish the necessary foundation for financial stability, reduced corruption, heightened investor confidence, and sustained long-term economic development. As these reforms continue to unfold, we will monitor official announcements from Baghdad, tracking key indicators such as digital wallet adoption rates, commercial banking compliance milestones, foreign exchange reserve stability, and formal trade statistics. Staying informed through credible, evidence-based economic reporting allows you to understand the true trajectory of Iraq's financial landscape as it evolves into a modern digital economy. Thank you for tuning in to this detailed economic analysis. If you appreciate factual, balanced, and responsible coverage of the Iraqi dinar and Iraq's financial news, please consider subscribing to the channel and liking this video. Please remember that the information provided in this broadcast is strictly for educational and news reporting purposes and should never be construed as financial or investment advice. Always conduct your own thorough research and consult with a qualified financial professional before making any financial decisions.